Good morning, everyone, and thank you very much for joining me this morning. It's Friday, it's the 19th of May. This is the Morning Market Review. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM. And my email address, rshaw@fxcm.com. If you need to contact me, please go ahead, send an email to that address, and I shall answer as soon as I can. I'm going to go ahead, bring up our disclaimers, and I'm going to start off with a high-risk investment warning. I'll keep this on screen for a few moments. Good morning, Zanetta. Lovely to have you on the webinar as always. Thank you everyone for joining this morning. Much appreciated as always. I'll just keep this high risk investment warning on for a few moments. And here is our market commentaries disclaimer. All right, and just our references, MarketScope 2.0 and TradingView. I think we'll do most of the analysis, if not all of the analysis on MarketScope. I'm just going to go ahead and bring that up. We're going to start off with the S&P 500. So yesterday, there again was optimism around the debt ceiling, with the House Speaker Kevin McCarthy suggesting that a vote could be tabled as early as next week. Well, there's also good results out of Walmart. Walmart, significant big retailer, it's been a fairly tough retail environment. All right, let's put in our peaks and troughs here. We have looked at this previously. I want to do it again because I think there has been a development here. We've got a reference trough, reference peak, right? Once we've got the references, it becomes a little easier for us to see what's going on. Here was a higher trough. Here was a higher peak. Here's a higher trough. And what we actually labeled the next, we labeled this as a lower peak before. I'm going to keep that in because a higher trough followed by a lower peak is a congestion pattern, a symmetrical triangle. So if we draw it in, you can see the breakout of the symmetrical triangle. So the S&P 500, this was the pattern we had in previously, starting to test that upper boundary of the triangle. I think it's worth keeping an eye on that. The RSI has been oscillating around 50. That makes sense. If you're in a congestion pattern, you're going to see momentum just bounce around the 50, right? So that's what we've seen here. If we are able to stick above 50 on a meaningful basis, then we've got a breakout here. So very obvious bullish development on the S&P 500. I want to go through to the Nasdaq now because I'm going to make a point. I'll just say I'll make the point now. I'm getting worried. Before, the market news has generally been bearish. I mean, if you been part of the media, you know this hasn't been a bullish market that's been loved. But now we're getting some bullishness that I think is being acknowledged, and I'm getting nervous. And I want to show you why I'm getting nervous. Not in a bearish way, more in I think a pullback is coming. What we looked at yesterday is the Nasdaq. And the Nasdaq has been a star performer for this bull market. You can see the higher trough followed by the higher peak, followed by the higher trough by the higher peak. As Gurdeep said yesterday, the momentum has notably shifted up. So, and that's from the gradient of the green trend line through to the orange trend line. But then we suggested we've got to just be careful because we're getting towards that overbought level on the Nasdaq, and the Nasdaq is showing leadership. So if the Nasdaq goes overbought, it could be the first sign of a correction, right? Let's go a little bit deeper than that. Let's go through to the FANG basket. So here we're looking at FXCM's FANG basket, specifically looking at Facebook, as it's known as Meta now, Apple, Amazon, Netflix, Google, which is known as Alphabet. And this has been a really strong basket. You can see the trend here, putting the trough, putting the peak, putting the higher trough. Okay, and of course here's the higher peak. So there's no doubt that we got an uptrend on a weekly basis here. As soon as we took out the peak over here, we were trending up. And I think that you can all see the issue here is that, well, this is showing relative strength even against the Nasdaq. So the Nasdaq showing relative strength against other indexes. Well, this is showing relative strength against the Nasdaq. We've gone overbought here. Let's just change the color here to red. Okay, we've gone overbought. So the way that the RSI is set up, it's a slightly different setting to the default. Here it's 10 periods, and it is calculated on the median. And I found that with these settings, the 20 and the 80 level serve as pretty good indications of overbought and oversold. And here, well, we've gone overbought. And I think that this overbought condition is something that needs to be monitored. A instrument cannot stay overbought for long. If it does stay overbought for long, it's a highly speculative market akin to a bubble, right? But the RSI effectively sticks to the Pareto principle. What's the Pareto principle? It's the 80-20 principle, where 80% of its time is spent between 20 and 80, and 20% of its time is spent above 80 or below 20. You know, so given that 80% of the time is between 20 and 80, well, this has to, or one would suggest that this has to normalize sooner rather than later. There was a time when I saw the RSI spend a considerable amount of time in overbought. That was on the Bitcoin chart probably about 2 years ago, and it was speculative. It really was speculative. So it can happen, but it's very odd. So the last time that we went overbought here, you can see we had 1, 2, 3, 4 weeks of lower highs, lower lows. Okay, and then it moves up again. I think that the idea here is similar to what we talked, what I showed yesterday, in that for the RSI to normalize, it's not necessarily a bad thing. It kind of suggests corrective moves. Suggest these corrective moves. Well, these corrective moves are exploitable, assuming that the primary trend is up. So the primary trend here is up, higher trough, higher peak. The way that the primary trend here would change from up to down would give us plenty of warning. It would go like this. It would give us a lower peak and give us a lower trough. Then we can say with some certainty that it looks as if the trend is changing. But a pullback most likely leads to kind of the next series of higher troughs and higher peaks, right? Get the trend developing, because we know that the markets don't move in a straight line. But it's easy to say that corrections offer exploitable opportunities. It's much more difficult when we're going through the correction, because the news is negative, the sentiment is negative, it affects us as traders, affects our psychology. So we have to try and be as objective as possible, which is extremely difficult. It's easier said than done. And we have to acknowledge that if there is going to be a pullback here, that there has to be other sort of side effects, byproducts of that pullback. And one of those would be a flight to safety. A flight to safety. What's the instrument that generally is a proxy for safety? US dollar. Okay, so if we bring up the US dollar, so this is the next leg of the analysis. I'm just waiting for the chart to upload, I beg your pardon. Okay, if there is a flight to safety, I think that could cause confusion. What I'm worried about is that if we get a strong pullback in the risk markets, we get a strong impulse in the US dollar market, and I feel that could be a whipsaw, because I think that this topping pattern that we've spoken about so many times is still influential. It's not a head and shoulders top, hasn't completed. But what I think may be happening here, or I think what would be the sort of logical course of action is some sort of sideways movement, just as the risk markets are dealing with an overbought condition. But what would be very tricky is all of a sudden if the flight to safety pushes the dollar higher than that peak. And I think that could, it's definitely going to make the analysis more complex for myself, because all of a sudden the greenback will be showing an uptrend. Well, if the greenback is showing an uptrend, what's the underlying fundamentals that support that? And I'm not certain that there are any underlying fundamentals that support us. It's more a movement on sentiment more than anything else. Because I think, let's go to TradingView. Let's go to TradingView. I think that the point is easier seen on TradingView. So let's just take a look. Here is the US dollar. You can even see hints of it in terms of the RSI here starting to challenge the 50. I would prefer to see an oscillation around 50. Okay, but at the moment it looks as if it's trying to get above 50. Again, puzzling because I'm of the opinion that the US dollar has pressure on it. I would, just to reiterate, be much more comfortable seeing a sideways movement than a dollar uptrend. But that dollar uptrend is something that needs to be discussed, because the FANG baskets are showing that overbought condition. That probably needs to correct. Well, if the FANG basket needs to correct, that probably means the NASDAQ needs to correct. Well, if the NASDAQ needs to correct, it means the broader market probably needs to correct, right? So let's just take a look at this in terms of the fundamentals. First thing we can do is let's bring in the real rate. Okay, let's bring in the real rate here. So how do we do the real rate? I'll show you. Just click on the plus, click US 10-year. I'm just going to add that underneath. That doesn't look right to me. What have I done here? I haven't put in the correct ticker. Left out the Y. That's going to be, yeah, that's better. And then we're just going to take out the break even. So if you guys have ever heard of TIPS, Treasury Treasury inflation protected bonds. That's effectively what they are, the TIPS. Treasury inflation protected. This is what we're doing. We're taking out the break even here. All right, let's just add in the US 2-year as well, because the US 2-year is a good proxy for monetary policy. So we're getting a good look at the real rate and the shorter term monetary policy proxies. Let's just bring that in. They're going to show similar things, but just to be complete with the analysis, let's just throw these in. Okay, now let's put in that vertical that's separating the dollar uptrend from the pressure to the downside. And here we get something I think that is useful for us. We're getting a picture of the dollar moving up. We're getting a picture of the real rate moving up. We're getting a picture of the 2-year yield moving up. Okay, so we can see that the dollar is responding positively to hikes in interest rates. Okay, at the same time, when the absolute level of the interest rates are starting to decline, so and already we know that there is a good probability that the Fed has entered its pausing phase of the interest rate cycle, and we know that the market actually expects decreases in interest rates in the latter half of the year. Well, we're seeing the dollar push down there as well. So you can see the fundamentals here, the interest rate fundamentals don't support a higher greenback. But again, what happens if sentiment turns risk off? And I think there is a strong possibility of risk sentiment turning risk off. Why? Just to repeat myself, because there is froth starting to appear in the market leaders, the FANG stocks. So the FANG stocks are probably something which can give us quite a confusing reading. So this is what we're going to have to focus on, I think, over the next few weeks. I think there is a lot of optimism that is coming through with this debt ceiling. But technically speaking, I think there's headwinds. And what are those headwinds? Froth, market heat, overbought condition. All right. That's as far as we're going to go for this morning. If there's any questions, please go ahead and type those in. This is sort of our theme that we're going to concentrate on and just see if there is going to be any movement in the instruments because of that. I want to wish everyone a very good day, a very good weekend. Please join me on Monday morning when we discuss the markets all over again. Thanks very much, guys. Cheers.